Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up. And this is for Monday, and we're now at December 14th, 2020, 5:50 p.m. Central Time. Interesting day. Today we saw the Electoral College. They passed the vote for President-elect Biden. For all practical purposes, that's it. William Barr resigned just afterwards. Not a surprise there, one way or the other, and I do not expect he'll be an enemy of President Trump's. We have a lot of economic data that comes out this week, so you want to keep your eye on it. There are 16 banks now going to be telling us what their monetary policy is, and our Fed meets on that as well. The big event is going to be, does the Fed tweak or not tweak? That's what traders are going to look for. The majority think that the Fed is going to leave things just as they are. The minority thinks because of the surge in COVID-19 that the Fed's going to do some tweaking. That's where you're at. It's probably going to be a more important meeting as to the press conference and what is said in the announcement than the prior two meetings. So I'd pay some attention to it. The stock market up at this point. We have a new COVID bill that's come. If you get my full research, I've done a whole write-up on it. Basically, it's a two-part bill, and I'll talk about that probably in the morning update. If you take a look at the metal markets, a bit of a down right here. I am not surprised to see copper getting back to the 350 area. That's where I thought the market was going to fight a battle. It certainly jumped 9 cents higher, and it's come back from there. When we look at gold, I did a report, by the way, today, a short one for TikTok on Bloomberg. And it's oral, where they have me do my thoughts on the market, and they'll give me a subject. Today they wanted to know the relationship, as I see it, between the 10-year note and gold, which is very good timing. And simply put, people have to understand, gold has hit an all-time high. And interest rates went to an all-time low. As much as people like to fight those things, that's the relationship they often have, an inverse relationship. Now the problem is interest rates probably look like they're going to start climbing as we come out of the COVID mess. When that is, your guess is as good as mine. I know the vaccines were done, but we also know a new variant showed up of COVID in England. And we've got to be very cautious and watch that. Does that require a different vaccine? Who the heck knows? Europe is shutting down literally everywhere if you look at it. It's a real mess over there. And they're about 2 weeks ahead of us, so be careful here. But as you can see, gold coming back down. It's been in that throng. When it got over 2,000, it was there for a moment, and it's certainly back into this 1830 area, just hanging around here right now. When we look at Feb gold on the chart, there's many arguments you can make as to how this chart pattern is going to come about. I'm waiting to see what it is. Right now, I view it as bearish. And that's because in the swing line, I've got lower apexes of highs and lows. In other words, the market's making each reaction not as high as the prior, and each break to the downside lower highs, lower lows. The market is fighting now between the 200-day moving average in gray and the 18-day, just what we talked about at the end of last week. No change that I'm seeing there at all. The bias is down since prices are under the 18-day average. So far, we have the swing line down, bearish. The bias down, bearish. Momentum down, bearish. So everything's pointing to a down move at this point. Of course, you've got to always take into account what is the Fed going to do, and that's going to impact this. If you should get over 1854.20, you negate this pattern, but right now you wouldn't start a bull pattern. In fact, that can't begin on the current chart formation. So I'm looking for the bears to defend the 1835.20, but they got a heck of a risk. Back up to 1854.20, frankly, I don't think anybody's doing a heck of a lot. In the gold-silver ratio, you're just drifting at the 18-day moving average of closes. The silver market itself has got a pattern of lower highs, lower lows. It's staying over the 18-day average, so the bias is up. It's not activating the sell signal, but momentum's pointing down. You have two of the three elements. Take out 2369, and you might see a clear path to 2277.5. Take out today's high, Well, I don't know that it does anything because you got to come all the way back here at 24.43. That was the high there. Our high here is 24.36 and a half. So today's high isn't important. It's the high of that 24.43. If that's taken out, then you have to look to see, do you have higher lows with higher highs and get bullish. Again, you got the FOMC meeting, so I'm waiting on that. As for copper, when you lose an embedded reading, and you lost the reading, now let's take a look at the close of business today. Did the reading get lost? It absolutely did. Is it been regained since then? No. In fact, it's dropping worse. So I think the pros are coming out of their copper positions right now, and I wouldn't be surprised if you go back to the 18-day average to regroup, which is close to that 345 level. Prove me wrong, you got to get a big spike up overnight and into the morning and keep the embedded reading. I think that'll be hard. In the platinum market, notice I've moved to the April platinum. And by the way, today was the day where you were supposed to start your move to the March S&Ps and all the stock indices, the March currencies as well. Say goodbye to December. Momentum down. I'm still looking for price in the 18-day average to come together. No buy signal, no sell signal, just sort of drifting in price. The Palladium market is still caught between Bollinger Band, 100-day average, and 18-day average, all in here. Not a real trend trade to be had. Yes, if you were to just sit back in a classroom, you'd say you've got lower highs but higher lows. So you can't argue that you're in a clear downtrend. I contend this market's caught in no man's land. And in the dollar index, you're trying here to lose the embedded reading. Now, will you lose it? If you take a look at the close of business today, you did not. Let me come back to my right grammar. If you go back here to Thursday, you had an embedded reading not there. So we want to walk this through so I can teach you this. That's great. Okay, so you're looking for several days in a row where the readings are under 20. Then if you lose the reading right here, the only time you can get it back is the day after you lose it, and it's got to happen right away, which it did. Boom, bang, market opened lower and stayed down. You got it back. If you want to go look at time and sales, you probably can find that too. Then we get over to Friday. You lose the reading again. And then today, you get it back on the close, but right at the end of the day, barely. This market's fighting for direction. Why? FOMC meeting coming up. Which way is it going to go for the dollar? Higher rates, no change. Which way? And the COVID relief bill. What does that all mean? So until the reading is lost, those 2 days in a row, the bears are still in control of the market, and you still have that 90-10 objective. Lose the reading by a wider margin than 1 or 2 points, and that would be to the upside. You might be headed back to the 18-day average. I think the smart money's just clearing the deck. They'll take a fresh look at the market after the FOMC announcement and the press conference and gradually come back in. Does everybody do that? Of course not, but it's one of the ways to look at these markets. And each morning at 5:40, I put out my videotape so that you can bounce your ideas off of what I'm seeing on the charts. Now, you know that I've got a Cyber Week special that ends this week. I can tell you that already, and it ends sooner rather than later this week. That special involves, if you buy any of my research products for 1 year, the 1-year subscription, I will give you free my charting course, which is going to, it's right now $199.95. It's going to $249, I think, $95 at the end of this week. Whenever I end this cyber special, I'm taking up the course. You can give the course away as a gift. You can use it yourself. You don't have to start it today. You tell us when to turn it on. In my videos, I cover all this in the futures video, and on the weekend, and yes, this weekend I did put out the weekly charts for the subscribers. For you YouTube people, I took the weekend off. No real reason, not a punishment, I just took it off. When you take a look at what's going on here, $7.95 if you want to try this out, but you won't get for that price the charting course for free. The yearly subscription's $156, all paid up front, no refund, and you get the course. $156, and you get a $199.95 course and all this information. I think it's a no-brainer. If you want to take advantage, this is the time frame. It's going to end this week, and I'm not going to tell you if it's coming back or not. I doubt it for a long time. Obviously, at Christmas time, a lot of people take off. I might even go away, depending how bad the COVID gets, and I am concerned about it. If you need to ask questions, call my staff. Otherwise, just go to www.iraepstein.com. Under the word research, everything's explained there. What isn't explained is the special. I am honoring any one-year subscription taken during this program. You will get the charting course. We mail you the info on it, and away you go. I'm Ira Epstein. Have a great day. I'll see you tomorrow.